Are we on the verge of a major Bitcoin boom? If you've been following the cryptocurrency world closely, you've probably heard some bold predictions about where Bitcoin could go in the coming years. But what's fueling these predictions? The answer lies primarily in the global economy, and in particular the US Federal Reserve's upcoming interest rate decisions. In today's video, we'll dive into why experts say 2025 could be a pivotal year for Bitcoin. From the Fed's expected rate cut to global financial trends, we'll cover everything you need to know. So, brace yourself, the next 12 months could be explosive for Bitcoin. Hello everyone and welcome to our channel dedicated to the world of cryptocurrencies. Here you will find market updates, project reviews and advice to help you make informed decisions in the world of cryptocurrencies. I invite you to follow me on the channel to always be updated. Let's start with the main question: why do so many experts predict that Bitcoin could explode in 2025? The answer mainly has to do with the Federal Reserve, commonly known as the Fed, and its interest rate policies. Historically, the price of Bitcoin has been closely tied to the actions of the Federal. When interest rates are high, borrowing becomes more expensive, and risky assets like cryptocurrencies tend to underperform. This is because investors are less likely to put money into volatile investments when they can get safe returns elsewhere. However, when the Fed lowers interest rates, it creates a risk-on environment where investors are more likely to invest in assets like Bitcoin. At the next meeting of the Federal Open Market Committee, FOMC, scheduled for September 17, 2024, the Fed is expected to make a significant decision. Many analysts believe the Fed will shift from its current rate hike stance to a rate cut stance. This would be the first time since 2020, during the pandemic, that the Fed would cut rates, and this could have a huge impact on financial markets, including Bitcoin. Why is this so important? To understand the connection between Bitcoin and interest rates, we need to look at the bigger economic picture. When the Fed cuts interest rates, it lowers the cost of borrowing. This makes it easier for individuals and businesses to borrow, which stimulates spending and investment. In a low interest rate environment, investors tend to shift their money into higher risk but higher return assets, such as stocks and cryptocurrencies. Bitcoin, with its limited supply and growing institutional adoption, is an ideal candidate for this type of investment. With interest rates expected to drop from 5.38% to potentially below 3%, the market could see a huge influx of capital into Bitcoin. There is currently about $4 trillion parked in U.S. money market funds. These funds are typically invested in low-risk, low-return options. But as interest rates fall, investors will seek better returns, and Bitcoin could become a hot pick. This massive shift in capital could send the price of Bitcoin to new highs. One of the most vocal proponents of a 2025 Bitcoin boom is Fred Krueger, a Stanford PhD and Wall Street veteran with decades of experience. Krueger has followed interest rate trends closely throughout his career and believes Bitcoin is on the verge of a significant price increase. According to Krueger, we could see Bitcoin hit $200,000 by the end of 2025. His rationale? Fed rate cuts will create a perfect storm for Bitcoin, as trillions of dollars move out of low-yielding investments and into riskier assets like cryptocurrencies. Krueger points out that the interest rate futures market is already pricing in significant cuts. The market currently expects rates to fall to around 2.8% by December 2025. This is a huge shift from the current rate of 5.38% and could create the perfect conditions for a risk-on environment that greatly benefits Bitcoin. Another factor that could drive Bitcoin higher in the coming months is the end of significant selling pressure. Bitcoin has faced several large sell-offs in recent years, including the U.S. government's sale of Bitcoin seized from the Silk Road marketplace, the distribution of Bitcoin from the Mt. Gox exchange, where users waited years to get their funds back, Germany's sale of Bitcoin reserves. These sell-offs have put downward pressure on the price of Bitcoin, but the good news is that they are coming to an end. Once these events are fully absorbed by the market, there will be less selling pressure, and the price of Bitcoin could start to rise again. Interestingly, we are seeing a similar trend in the gold market. Gold, like Bitcoin, is considered a store of value, and its price has been steadily rising. In fact, gold recently hit an all-time high of $2,600 per ounce. This is significant because it signals that investors are seeking safe haven assets in uncertain times. Countries like China are buying up gold reserves, a stark contrast to what's happening with Bitcoin. There's no MDGOX equivalent for gold, no big sell-off depressing the price. In fact, demand for gold is growing. Kruger believes Bitcoin will follow a similar trajectory, potentially overtaking gold as a store of value. While the macroeconomic environment seems favorable for Bitcoin, it is important to consider regulatory risks. In the United States, the Securities and Exchange Commission, SEC, has stepped up its regulatory activity in the cryptocurrency sector, filing lawsuits against major exchanges such as Binance. However, there are signs that the regulatory environment may be changing. In a recent regulatory filing, the SEC admitted that it had misclassified some cryptocurrency tokens as securities. This is a significant development, as it suggests that the SEC may take a more lenient approach to cryptocurrency regulation in the future. While regulatory risks remain, the overall trend seems favorable for Bitcoin. As institutional adoption continues to grow and the regulatory landscape becomes clearer, Bitcoin could see a significant increase in demand. Of course, no investment is risk-free. While the outlook for Bitcoin in 2025 is positive, there are still potential hurdles. First, the global economy could face unexpected challenges, such as a recession or geopolitical tensions, which could affect investor sentiment. Furthermore, while the Fed is expected to cut rates, there is always the possibility that inflation will remain high, forcing the Fed to keep rates high. This would weaken the risk-on environment in which Bitcoin thrives. So what does all this mean for you as an investor? If you've been hesitant about Bitcoin, now might be the time to seriously consider it. The combination of Fed rate cuts, the end of selling pressure, and increased institutional adoption could create a perfect storm for Bitcoin's price to rise in 2025. With that said, thanks for following us this far. Don't waste your next crypto flight. Thanks for being with us. If you want to stay updated on the latest news in the crypto world and not waste a crypto adventure, hit that follow button and activate the bell. Ready to go? Then see you in the next video.